Welcome back to another episode of You Already Successful. You, yes, you, right now. Today's special guest is my good brother, a friend I've known since high school, actually.
Yeah.
I met him back in, when did we graduate? 05?
05, yeah.
Yeah, 05.
So before then.
Which is crazy how fast.
Same homeroom.
Same homeroom.
Last names, that's why.
Right. And this dude has always been the genius in the room.
No.
And now he's the genius in the world. Yeah, man. So former stockbroker, government contract worker.
Yeah,
Now he does some government contracting, but also branched out and has his own curriculum for the market and getting people educated.
Financial education.
Financial education. So I'm talking about my boy, Mawuli. Welcome to the show, man. What do you want? What should we know about Mawuli?
Yeah, Mawuli Vodi.
Who is Mawuli?
Born in PG County, Maryland. Born and raised to two wonderful Ghanaian parents. I got three sisters. I grew up not having much, and I think that kind of spurred my the questioning that I've always had about money and just investing and things like that. I've always been somewhat curious about things, and we went to Northwestern High School, and that's where we crossed paths and matriculated at George Mason University, and that was an experience. I had a lot of fun in college. It was good. I learned a lot about myself, met the love of my life. My wife, Catherine, and we got two lovely kids. But along that path, I didn't know anything about investing and saw this internship at a company. And I was like, let me just give it a shot. I didn't know anything about investing. All I knew is when I saw those numbers scrolling across the bottom of the TV, like the stock market, I had more questions than answers. And I was like, I got to figure this out. And what better way to do it than to be an intern? And it was paid. That was my thing. I was like, I needed some bread. So.
Yeah, I mean, it's best when you can learn. Right. You have a natural passion for it, and then you also get paid behind it.
Exactly,
that's the best combination.
So it was a good experience. Learned so much. Like that's one of those things where that was where I was able to cut my teeth in the industry and really learn about the ins and outs and different sides of it. What it meant to be like just an investor on the consumer side or just invest on institutional side and things like that. I worked mainly with customers face to face, and whether it was on the phone or virtually in a sense, teaching seminars, stuff like that. So I spent a good amount of time doing those different things, and it helped me learn from other people's mistakes because I jumped in. So my senior year at George Mason. I started that internship. It happened to be 2008. And it was like the prelude to the economic downturn. And it's like you seeing the market go down 600, 700 points, day to day. And it was like, what am I missing? What's going on? It's just, I ended up having more questions than answers. Yeah. And just like my ears perked up and I was like, I need to know more. And so why didn't I know about this before? That's something that always kept ringing with me. So.
Yeah, which is interesting because it's like now in today's climate, we're seeing some of those same, drops. And we could get into more of those because I definitely want your advice and your take on some stuff now that I have an expert. So funny story, too, how we got back in communication after we both graduated. So those who know me, too, I deal with stocks some, right? And I say some in this space with you because you've probably forgotten more than I've ever learned or know about stock. Shout out to one of my mentors, Mr. Drakes. He was a surgeon.
Okay.
He practices a surgeon, and then he kind of taught me and my friends about stock when we were younger. I think we were like 17, 18. He would pull us over on Sundays and feed us. And Mikey, shout out Mikey Drakes too. That's one of my good friends. It's his dad, and he would pull us all in and teach us about stock.
Good.
And back then, I think I had like I think I had like $1,000, and I was like, if I wanted to invest $1,000, what should I invest it in? He said Apple, and I did that. Then I really kind of wasn't as involved in stock.
Started trading back and forth, or what did you?
No,
what you
I just bought. I think it bought me. It was like $200 a share. So it bought me like 5 shares, and I really didn't dig deeper into stock. But then I looked like 10 years, or well, not 10 years, maybe like 7, 8 years later.
Okay.
And I was like, how did I end up with more than 5 shares of Apple? And the price went up.
Yeah.
That's when I started learning about splits and that stuff. So he taught me a lot of like the technical analysis and those and stuff to look for. But then I kind of removed from it. But he really got me started.
That's what's up.
And then once I re-engaged, I was curious as well. Like, how did this happen? And I learned a little bit more. And then, again, I still don't know a ton. So shout out to you as well as Financially Present, which is the name of his company and the curriculum that he's put together. From now on, anybody that comes to me and asks me for stock advice, I'm just going to point them to your curriculum, man, because that happens. And I really don't know a lot, and there's a lot that that is uncomfortable in not knowing, which keeps us out from getting involved in something that really could benefit and could change our trajectory. So I want to dig more into that and those specifics. But I also don't want to miss, because I know you have some credentials behind your name.
Oh, my goodness.
Let's talk about those.
There's some that are currently behind my name and some that have I've let kind of go stale in a sense, because I spent about 9 years in the brokerage industry, licensed as a stockbroker, an investment consultant, financial consultant. And there were some good things about the industry, and there's some things that I wrestled with, and I eventually, decided to part ways. And I went on this long journey. I also started some government contracting. I still do a lot of that now. And I worked with a coach who, funny enough, used to be one of, we crossed paths as, him as a client. And we connected really well. But he's a coach, and more like a mentor to me, as well, similar to how you had somebody mentor you. And I was always so distracted. I'm one of those people who I want to do everything. Like, I don't know how to say can't. Like, I can't say that I can't do something, right? And that's something I'm wrestling with too, because that also turns into me figuring out when to say and when not to say no. But I had all these ideas about how I can make money, and it's there was a point where I wanted to run a food truck, because I like food. I'm a foodie as well. I was and I've never worked in food service, but I have all the respect in the world for anyone but I also cook at home, so I know what it takes to cook and stuff, but not work as a profession and cook. Yeah. Or work in cooking as a profession, and working with this coach. Shout out to Sterling. He helped me really focus on what was important for me. And I found a few things, and it was faith, family, and finance. Through our coaching sessions, I realized that my faith was one of the most important things for me, my family, and building that up, and then finance. That's kind of just, that was part of my compass. That's what's helped me in, all of the professions I've been in. And when I spent those years as a stockbroker, investment consultant, what I really realized was there were a lot of barriers to entry for a lot of people, especially people of color. And when I was in that industry, I did not see enough of me. So it was just, it was one of those things that it was just, I was not too far away from where I grew up. I grew up in Hyattsville, but working in Fairfax, working in Centerville, working in Arlington. Every now and then you see some high school student come up and say, hey, I want to open up an account. And I was like, I couldn't imagine wanting to open up a brokerage account in high school. That was just so foreign to me. It's just so far-fetched. And I was like, man, I just wish I had known a few years earlier. I wish, and I just think of how could I prevent someone else from feeling that way, feeling that, hey, I wish someone would have told me, or I wish I had some help. I wish I knew someone that knew a little bit more that could help me, do this. And I started, even though I was doing more of my government contracting and consulting, this was something that was just, it continued to be a passion for me. I was like, whether it made money or not, I still want to teach people about investing. I still want to help people. I still want to change that dynamic, because you get people who are just operating out of fear
Yeah.
and not out of confidence or out of knowledge.
Yeah.
So trying to change a lot of that. And that's kind of how Financially Present was born. Just a way to engage and empower people, teach them, help them understand that, hey, in order to invest and navigate through the financial markets, it does require some risk and it requires knowledge. And in that knowledge, you build that confidence to make those financial decisions. So that's a lot about of what Financially Present is about.
Yeah, man. I mean, kudos to you for, again, I think a lot of times we see what we didn't get.
Right.
Or when you learn about a good thing, sometimes what naturally happens is like we immediately think about what we could have done with that good thing if we known earlier.
Right.
But then it's also good when you discover a good thing that you're in it now.
Yeah.
You know what I mean? Because that's the first step, is just getting started now wherever you are. And don't beat yourself up off of what you didn't know, because I think a lot of times that keeps us out as well. Where it is, I know plenty of people that was like, man, they almost feel like it's too late to jump in the market. And it's like,
the wrong mindset.
Well, actually, if you start now, then you'll learn. And yeah, you always can look back at how sooner you could have started, but it's best just to get started now. Yeah. Talk a little bit about the market now. Right. Because I think there's, the natural reflex too is when everything is green and going up, everyone's excited. Yeah. And when everything is red and going down, everybody's panicking. Yeah. But there's really opportunity there.
There's a lot
in red.
There's a lot of opportunities, and the people who become wealthy, or people who become better investors in the future, are the people who take advantages of times like now, because this is where you really build those calluses. I think I mentioned earlier that I play a couple instruments. Like started off with percussion when I was younger. I always played in church, and when you step away from playing, like your hands get a little soft. Mm-hmm. But if you play regularly, play every Sunday or have rehearsal and things like that, your fingers or your hands get used to the impact, the regular beating. And there was a time when my hands were really, really rough because I played more when I was younger. But I transitioned to playing the bass and playing the keys, and I'm average at all of those. But
this guy, I don't know how, with all that he does, he still has time. So what he's referencing to, I think we were having a long conversation before we cut the cameras on. So I think you did mention that you played when we were talking before we cut the cameras on. So just so y'all know, there'll be stuff that we probably mentioned that we don't remember when we talked about it, whether the camera's on or off. So we'll fill you in and just go with it as we talk about it. Yeah. But you were making that parallel to
the market.
In the market.
Yeah, it's these people will think of them as rough waters or just a difficult time, but this is where people learn more in down markets than they do in up markets. It's really easy for people to look like, hey, you're an amazing investor when the market keeps going up. It's like, yeah, we're all winning. Everybody's going up. Mm-hmm. But now when the market is down, that's when you figure out, well, how can I continue to make money in a down market? Mm-hmm. Then you might start exploring things like, and these are more risky things, but it might be like options or shorting and things like that. And I always tell people they should assess their risk before investing and, of course, increase their knowledge. But you learn more. How
do you assess a risk? I'm going to break some of that stuff down.
Assess the risk. Some of this is personality based, for one. Because I've met some people where they're, younger than me, but they've been coached to be so nervous about investing or taking risks that they say, I don't want to lose anything. I don't want to lose money. And again, it ties back to the knowledge that really will help build that confidence in people wanting to take that leap or to increase the level of risk. Because if if anybody is let's say 45 or younger, you should be aggressive. And a lot of times when I look and understand how aggressive they think they are, they could be more aggressive, honestly. But it still has to be tied to what they're comfortable with. Yeah. Because when you work with people like financial advisors, they can give you all of the recommendations they want, but it's always up to the client to say yes or no. Yeah. They can tell you, hey, based on your age, based off of what you've done in the market, what you're already doing, we believe you need to be invested this way. And you can still say, I disagree. Or you can say, I want more risk, or I'm comfortable with the market getting down even lower. Like someone like me, because I've been in the industry my risk tolerance is going to be much higher than someone who is also 34, going on 35, and just starting to invest. So that's a big part of it. And it really just comes with being comfortable in the environment, like staying in. And I don't want to go off on too many tangents, but I think about, I was just talking to another buddy the other day about just the idea of staying in something on a frequent basis, whether it's successful or unsuccessful. It will coach you to be numb to the feeling of defeat or failure. Like they talked about a guy who wrote like 10 books in like 2 years, and someone asked him, how do you do it? And he said, I made a commitment to write 100 words every day. And that meant he had the behaviors, whether it was like benefiting him monetarily or not, whether it was successful or not, he knew he would write regardless. And it just created that muscle, that callus. So like for me, I check the market almost every single day. And there are times where I don't need to look at my account, but I check the market. I understand what's going on a regular basis. And I'm like, wait, there's always news. There's always, the sky is always falling. That's what sells. That's what sells views anyways. And it's like when you can pull back the veil on some of these things, it helps create that level of comfortability, whether it's financial markets, whether it's, I don't know, playing the drums, playing something, whether it's anything you want to work at. So,
man, that's deep. I got so many different thoughts that came while you were saying that. Is like, it boils down to like, you're uncomfortable if you don't know.
Right.
So one of the key things to combat being uncomfortable is learning.
Right.
And then, like you said, assessing where you are, right? Because what you can do is going to be different from what I could do. And even if it's $10 or $20 and whatever it is, like you can get started with that with less risk.
Right.
But also there's that risk versus reward as well. So if you are, if a stock increases by 50%, the same guy that invested $100 now, is 50% up. The same guy who invested $100,000 is now up. So you can't really look at how much somebody's gained because that means they just invested more. So
they took on more risk.
Yeah, there's more. They took on more risk. So if it went negative 50%, then they're hit
losing more.
Yeah, they took more of a hit than you.
Yeah.
But I think about too, like an oil change. Like I've always changed my own oil.
Okay.
Right, because it's essentially jack the car up.
Yeah.
For those who don't know, when you go pay somebody a lot of money to change your oil, they jack your car up, they loosen the bolt with the oil pin, oil pin bolt. They take that out. Oil falls out. They screw out your oil filter.
Right.
Let that drain out. Put in a new one. Put the pin back. Put new oil in. Put your car down. And if you don't know how simple it is, or if you never tried or just got started doing it, then somebody, $100, $150 oil change might not sound bad.
Right.
But when you know how to do it and when you've had experience doing it, then you're like, wow, not only is this easy and straightforward, or easier than I thought it was, there's opportunity for me to save money there.
Same time, you don't have to go anywhere to do it. You can do it.
Same
I just
time.
wonder about where you dispose the oil.
Right.
That's always
So you don't throw the oil in your regular.
Right.
Yeah. So I take it. Gas stations. Some gas stations take them. I take them to my mechanic and dump them in his.
Okay. Yeah.
But to make that parallel is the same way with the market. Is that some people were scared because they didn't actually try or know enough to get started. When it really is straightforward. Yeah. Once you get started, then there's the opportunity to change your trajectory for your family, and there's so much profit to be made. I'd say also too, in this climate with everything kind of being red and down, if you haven't gotten involved in stock yet, now is like a great opportunity, because other than like for us, we've been in it.
Right.
So we've taken a hit to some degree. If you're new though, and you're coming in, you can actually get a solid stock and company at a low price right now.
Things are at a discount.
It's
shopping on clearance. This is what I try to teach people. It's like everyone's talking about inflation. Everyone's talking about how the costs are high for gas and for food and goods, and it's very true. The only discount you're getting right now is in the stock market, and I'm telling people, don't miss it. Just don't. That's where your discount is, and trust me. These deals that you're getting now, it'll be a number of years before you see them again. That's what I say. And some companies, I will say, are probably not going to make it to the better side of this, because the way that they operate. Well, in fact, I'll take a step back too, because when we entered this pandemic, we saw a big contraction, so a big reduction of, whether people are working or businesses taking a hit and not being able to make money they normally would. And then you saw an expansion, and like, okay, doors are open back up, and things started to swell up to a certain point. And we saw a lot of, I don't know, I would say almost false gains in a sense. And I use the word false loosely, but like companies who would not have swelled up so high if not for a pandemic situation. And now we're seeing some level of a contraction, or you hear recession talks and stuff like that. And of course, there's multiple prediction as to the exact timing of a recession. But we're seeing a lot of it because of the last couple of years, this swelling and shrinking.
But with that though, I mean, like you said, you pointed out some stuff, because most times what happens in the market is based off of what's going on in the world.
Yeah.
So like with the, what's going on in Ukraine, and what's going on with the inflation, et cetera.
Right.
Like a lot of times too, that has to do and has direct connection with the market. And, there's bear versus bull.
Bulls, yeah. Bull
and
market,
we were in a
market.
bull before, when everything was kind of pushing up, and now bear, everything is kind of pulling back.
Right.
But with that too is some comfort in knowing too, which is why you say you stay connected even if you're not watching your account. Because then you can kind of make some connections like, all right, this company isn't failing. This company is actually still doing good.
Right.
And if nothing's changed with that, and it's just a matter of what's happening to the overall, then you can kind of say like, well, you know what? Yeah. This is actually on sale.
Yeah.
Because it's different from like a company that showed up in the news for the wrong reasons. And that speaks more to that one company. So can you break that down a little bit on like the grand scheme of the market? Not all are the same, because we're generalizing a lot.
Yeah.
There might be some stock that you might not need to go into. Like,
so, and this,
how do you pick
this comes
stock?
to, and you said a couple of things that I want to touch on too, because it ties into the risk level, because some ways you can combat risk is by diversifying how you invest. And you just mentioned like, okay, well, some companies are on discount, but some companies are on discount because their stock should be lower priced. It should not have been as high as it was, right? And one of the ways you can combat that is to make sure you're diverse in how you invest. You don't want to be, all in on one company, because there's so much out there in the market. It's like, I'd rather be, how do you be right all the time? And that's to be as diversely invested as possible, in a reasonable fashion too. You don't want one share of every single stock, right? But you want maybe the best of the best, right? And that's why you have to diversify, and that helps reduce the risk in your account, and also build up some of that confidence in how you invest, because it establishes that comfortability. I don't have to create an IT firm. I can buy some of the biggest IT firms that publicly traded. Like, I don't need to figure all of this out from the ground up. People have paved that path.
Yeah.
So
Can break that down some more though too, for like the new person to stock.
Right.
Diversify, meaning like, don't just grab one of a thing or put all of your money into a thing. You want to kind of get multiple, so that if one takes a hit, overall you're not suffering.
Yeah.
But then also you talked about, you just mentioned not just diversifying, but the risk.
Right.
Assessing the risk, and knowing kind of which ones to go for.
Yeah, that's you can even in fact, I'll tell you in this way. You can always guess. You can guess the company. Imagine a car company where the owner director is very cavalier. They tweet a lot. They it's very like technology forward, very advanced in what they do. But you investing only in that one company, that one car company, rests upon the leadership of that one individual. Their behaviors. They can be very cavalier. So they do one thing, say one thing, another moment, or they might tweet this or do that, and then they'll say, "Oh well, you know what? Never mind. I changed my mind." But they got a good product, right? So you might see a lot of ups and downs with that particular company. Whereas other car companies, for example, could be doing similar things, and they've been around much longer. They might operate more quietly, may not be as outspoken about stuff, but they're also being technology forward. They have the resources, right? So that would help me in saying that, well, maybe I don't need to only be in this one car company. Maybe I'll buy something that allows me to be spread across the major car companies of the world. And I know that they have distribution centers here and they got factories there and like all of these different things. And I can feel confident enough to say, well, I don't have to worry about a scandal between the executives or the CEO doing this or that, and my money's going, south.
Got it.
So
because all of that stuff plays into the stock and what we see
to some degree too. Because I always say, I try to tell my the students, because I do coaching as well, from as far as investing, and I just try to tell them that the stock market is a popularity contest. It's big on the popular, like. There's a certain portion of the value of the stock being tied to the value of the company, but then there's also the part that's tied to what they're going to do in the future. And the future we haven't seen yet. What they say that they're going to do. Hey, we're going to produce this many cars, or we're going to create this new product, or we're going to get this contract overseas to do this type of work, or whatever the type of company is. There's something to be said about the future hope of that company, and that also drives the price of the stock too. And if the future outlook is lower, then you can expect some, at least in the short term, that there's going to be some pullback, or the stock won't be moving up as well. And that's just from that's without even going into like technical analysis or even as much into the fundamentals. There are some aspects where when we talk about fundamental, we're really just talking about the financials of the company. And then when we talk about the technical analysis of a company, we're really only focusing on the price movement and the volume of the stock itself. So it completely ignores, what the CEO is doing or what products are coming out. We're looking at signals in the movement of the price and the volume when we're talking technical analysis. So there are so many different ways to pick how you invest. And I think just being more and more comfortable with your risk patterns and how much time you have, because not everyone has time to sit there and day trade or to be a swing trader and do all of these different things. So, in
fact, day trading is what brought us back together. Yeah, that's something I didn't touch on. I didn't finish that story, but I was day trading. I found myself dabbling in that, and man, I was stressed out. So I was actually working. But at the time, this was years ago, and I'm no longer connected there. So I could say I was like working and also day trading. And I stepped away. I remember price was going up and up. Right. I stepped away for a quick second, went back and refreshed it. Price was just going down and down.
Yeah,
and down.
You got to be ready for it.
And I was like, oh my gosh. And I was trying to sell it, and I couldn't figure out how to sell it.
No.
I had Scott Trade, was the company I used. So I'm like, I got to call. So I called Scott Trade, and I'm like, I need to speak to the manager. I'm like stuck. I'm trying to figure out how to sell. Who answers? This guy.
I was the branch manager at the time in the Arlington branch. And so it's funny you mentioned that. I was a stockbroker and then eventually became a branch manager. And I kind of wrestled with trying to, with deciding to move up, but it was an opportunity that it's just like the stars aligned. I was like, you know what? I'm going to manage this branch. At the age of 26, I was one of the youngest branch managers in this company. And I worked in the Arlington branch, and it was a tough crowd. I will say this branch was not the highest ranked as far, because it had this very small area. Arlington is very small in relation to where Virginia and stuff is a suburb. I can't even call it a suburb. It's more of a DC. It's a city outside of DC. Okay. And one of the things that was just funny to me, because I think at that point you probably still lived in Maryland. If you're in the Arlington branch and you worked there, you had to be licensed for DC, Maryland, and Virginia, because you're so close in proximity. But it reminded me that they never put a branch in PG County or just like where I grew up. That was one of the things that it always bothered me. And I know what it took to, I knew exactly what it took for them to decide on where to put a branch. And they look at economic data, they look at, the radius of all of this and all of that, and they also look at where other brokerage firms put branches too. Okay. They wouldn't straight up put it across the street, right? Like a McDonald's, Burger King type of war or something like that. But they would put it in close proximity because they all fighting for the same business basically. But I was like, dang, why wouldn't they put one there? So if that means if, I still live where I grew up, my account wouldn't be in a PG County or, branch. It would be in the Columbia branch. It might be the DC branch, or it might be like Arlington. Those were the closest ones. And I was like, dang. So it's just funny that, I could be there and people that I grew up with could have accounts with me. It's just random. So just coincidentally how that happened. And, I didn't leave too far from the area anyway. So just moved to Virginia. But
man, I never forget that day for several reasons.
Right.
Because literally I saw like a $1,500 investment, and then I started learning about penny stocks too.
Right.
And you helped me with that because you treat those differently.
Yeah, penny stocks. Yeah, and that was always a way for people to kind of cut their teeth. But penny stocks, they also have the most risk.
Dangerous, man.
I don't advise it.
So when you say assess risk,
right? Yeah,
I didn't do that.
Right.
And I found out the hard way. Again, I owe charges to the game about like I learn more now from loss because it's actually hitting me. So I dug in deeper because I actually experienced it.
Yeah.
And then overall I gained, but then at the same time it's just like, well, I'm never going to do that again. that almost made me walk away from stock investing as a whole.
And that's one of the reasons why I do this. I want to help people not completely get this bad taste in their mouth from investing, because there's some people who always say, "Oh, that's like gambling." Well, it's only gambling if you don't know what you're doing.
Yep. If you skip steps.
Right. If you skip steps or take shortcuts or something like that, that's or if you don't, if you're just not, if you don't have a strong knowledge base, if you don't benchmark and say, hey, I know this, I know this, I know that. I know how to not be scammed. I know how to not open up a brokerage account at some place where it's like it's a chop shop where they trying to sell you things. And if you've ever seen movies like The Wolf of Wall Street and stuff like that, it's like movies like that, which are real life stories, changed the investment game and created so many rules and laws that have made it the way it is today. So there are certain aspects of that you won't see anymore, but it's just changed the way it's looked. And what we've seen is now it's happening in cryptocurrencies and just different facades with the blockchain and stuff like that. And I strongly believe that people had a firmer base in how they can invest in the stock market, they can discern better in the crypto market as well. Because these schemes and scams have been around for a long time. Yeah. You might hear something like a rug pull or things like that. And it's like people have done that in the stock market, and a lot of legislation and rules have really changed that aspect of the game, has made the stock market look so much more safer at times, because it's something that's been around longer. Crypto is a new game, a new frontier, and what I would hate to see is people gambling their retirement money without knowing or without being comfortable with what they're investing in. Because people are big on seeing, oh, this person said they made 300% returns. I want to see if I can just do a little bit. Or I want to get that, and I'm hoping to retire in a couple of years, and slow your roll. I'm just like, be careful.
Yeah. And the thing too, though, is like you said, the stock market is based on history, but then also projections on like what's to come.
Right. And
if some of that is doesn't meet the expectation, then you'll see some pullback and some stuff. But historically, I think it's something like 10% is the average return on investing in the market.
S&P 500, 10% in the long term.
In the long term.
If you just date, like for example, last year, the S&P 500 did 30%. This year, we're down 20%. So we technically are averaging 10%. If you just look at last year and this year, we still got almost 6 months left in this year. But all it does is say that, hey, it's important to be in it for the long term, or at least have long-term money that is invested so that you can take advantage of the 10% or more, because there is more at times. AKA
money that you won't miss. Because I think that's part of it is too, when you're doing your own assessment, is like, don't do this with money. If you have $1,000 coming in and you got $1,000 for rent,
right? Like
you're gonna be in a tough situation because you need it to go right, and you need it to go right now.
Yeah.
And money in the stock market is not actual. They have a type of account set up, so it's almost like a bank account.
You can pull it up,
but it's not money that you actually have access to if you're invested in a stock. you only get that when you sell it.
Yeah.
That's when you recognize and realize either you've gained or you've lost.
And it's so important people are careful about that. And I'm sorry to cut you off, but
No,
it was
good.
one of those things where, and I always tell people, you can't invest with your rent money. You also, if you are investing short term, you are taking something that is risky, because there is risk in the stock market. You're making it more risky by putting a time frame on it and limiting it to a 1 month range or 2 month range, and saying, hey, I need this to work. This is, again, not the blackjack table. It's not roulette. We can't treat it like that, because those things are more short term. One spin is one spin, or one hand is one hand in blackjack. But stock market gives you multiple opportunities if you allow it to. If you just try to pigeonhole it into a smaller time frame, it is a disservice, I would say, because there's so much out there. There's and of course there's companies that aren't even publicly traded yet. There's some that are planning on coming public. You want to be involved. So it's important to have money that's set aside specifically for investing, and it has to be separate from your basic needs. You can't be tied to the emergency fund. In fact, it's important to have an emergency fund so that you don't have to tap into your investments unexpectedly. So it's extremely important,
because that will save you over time, as we will realize those benefits from keeping them in the market. Just a level set too. Yeah. You mentioned earlier on, like I might not want to or need to create or start a IT firm. I can just invest in there. So I think a lot of times too that gets overlooked. Like investing in a stock and in a company actually makes you a shareholder.
Shareholder.
And they have shareholder meetings to decide things that happen in the company.
You are owning property. Yeah.
So you break that down a little bit about what a stock is, because I think a lot of times people are like, oh yeah, that's a way I can make more money. Yeah. They don't understand, like, it actually makes you a part of that.
Yes, it's
so
an
if you
extension.
believe in it.
It's an extension of the company. Like if I want to say, you mentioned Apple earlier, so I just go with Apple. If I wanted to buy a part of Apple without having to physically buy, in fact, if you buy the phones and stuff, eventually the value will go down in time, right? But if I want to own a piece of Apple, like how would I be able to do that? I can't just go down to an Apple store and buy a brick of the building. Like I have to, ultimately they have, when they initially create shares they go public, initial public offering, what they end up doing is issuing an extension of the company in order to gain some quick money it's like a fundraiser basically. Mm-hmm. But after that, people are trading back and forth the secondhand shares that other people have owned, or shares that they continue to release into the market if that's part of their organization structure. But it allows them to almost create their own level of currency of their company. Another aspect of it that people can trade, because without that, you'd have to either buy the products or own. You ask them hey, can we franchise these locations or something like that? And that's not necessarily part of their business model. But in order to be able to buy a part of the company, it's like just an added plus, especially if you already understand the value or like the company or things like that. But it creates almost this value out of nothing, really. But it's really tied to the performance of that company, the name they have, the branding that they've done over the years, and how reputable they are. It's like now you can say you have ownership in it. Like I tell people, you don't need to like be a business owner or entrepreneur, but you need to. Everyone needs to own. So, and by owning, I mean owning other companies, owning stocks, owning other investments, because it also cuts back on time. Like I said, you can't. It would take me forever to try and create an Apple or recreate that or try to, and it's not to knock any startups or anything like that. Right. It doesn't mean it can't be done, but I don't have the expertise to try and start an Apple or a Google or a Netflix or all of these other different companies or Facebook, and these are all the popular ones. And
to tie it together, like you said, it goes back to like you doing a risk assessment, because at the end of the day, now you hear that back in. I was going to ask about that. So I'm glad you clarified that, how like an IPO, the initial offering, how a company starts there. But if you believe in that company, if you're doing your research and you feel good about the company, not just that you like the product that they have, but you're in tune with everything else that they're doing and going on, then you're making a sound investment. Right? You're saying, okay, I'm going to make the decision to invest in this company because I like what they stand for. Too many times we just go with something that feels good or sounds like the new thing.
Or someone told us.
Someone told, word of mouth. And those people might be doing that word of mouth to get that company bought and shares, and then that moves the dollar amount temporarily, and then there's that rug pull where then people, once it gets to a certain price, everybody's selling and pulling out, and then you're left holding the bag, and then we get burned like that. So
that happens mainly with penny stocks too.
Yeah, with penny stocks. That's how we got back in touch. But it's like some of us haven't started because we're like just too scared or don't know. The other half, a portion of us have done that the wrong way, like myself, and then you get burned, and then that sometimes that burn, you getting burned doing so keeps you away. Like, okay, I don't want to get. So I think we definitely need financially present, because we should be financially present, right? As well, and we gotta, if you share all of the places that we can get it, what it entails, that is what I'm going to be pointing people to, because I think that gives us more cover to make an informed decision. And then there's some of the things that might happen in the market that isn't as alarming because we are more prepped for it.
Yeah, and that's kind of when it came to like figuring out a name and stuff like that. When I talked about, I knew it had to be financially based. Where the present is more about just having that awareness and understanding. But then like when you have that confidence in investing, it allows you to be present and available to other things. Like I have confidence in knowing that, hey, I don't need to be a day trader and sacrifice time with my family or time with my faith, because I like to go to church. I also like to play music on the worship team. And I like to do other things. I got other hobbies and stuff that I want to do, but like, me being confident in how I manage my finances allows me to be present in other aspects of my life. I'm just trying to establish something so that people can avoid the mistakes that I've made or continue to be more and more comfortable in this environment. So if I were to do this on my own, I would have released some of this stuff years ago and it would have looked messy. And I had a good fraternity brother of mine. So I'm a member of Alpha Phi Alpha Fraternity Incorporated. And one of my brothers, he works in marketing. I remember drawing up the logo or getting somebody to do it real quick. And I sent him, I said, what do you think? Logo A and logo B, and just sent him a text. And he was like, what are you trying to do? And that started like a 5-month journey of me like really breaking down the brand and what I believed in. And so that I can really stand behind something all the way down to the font I use, the colors, everything. And it really helped me be able to just focus on what this is really about. And it's really about education. I tell people education is the engine of all of this, because it helps establish that comfortability, that confidence, the ability to understand your risk. And you can find me so many different ways. So www.financiallypresent.com is the main way you can find me. I'm on Instagram, I'm on Twitter.
What's your Instagram, Twitter?
Instagram, Instagram is at Financially Present. Twitter, it's Financially Pre-1, because they wouldn't let me do the full present. I don't know why. I have so many different products that I've put out over the years. It's a culmination of my experiences and what I've learned too from helping people with their investment journey. So, I've written 2 ebooks. The first one is just more of an introduction to investing. So some people prefer that, hey, they just want to read it. And it's actually tied with the 16-week course that I have built out on my website, where it goes over everything you would need to know in order to be a confident investor and to really step into this journey. And for different levels of membership, I actually do coaching as well. So that way you have direct access to me on a weekly basis. Now we just switched to on a weekly basis. So it'll be fun. Along with the ebooks, I have, online forum and stuff like that. So
you break down all of the steps to give you comfort. Yeah. I think there's some parallel to what you just talked about when you showed your brother the logo to settle, and he's like, just hang on. What are you trying to do?
Right.
Because I think the parallel there is a lot of times we rush like, okay, I want to make some money. Let me jump in the market. And then it's like, we need a coach that's like, let's pause. Like, what are you trying to do? And not just what are you trying to do or how much you want to make, because obviously everyone wants to make a lot. Let's boil that down to like, what can you do now? What should you do? What will be more comfortable so that you don't put yourself in a tough situation or try to, make it all happen too quick. So I think that pause is what we need.
There's a couple times he had to slow me down too, because he's like, if you're not losing money, just follow the process.
Right.
And that was something I needed to hear.
The process.
Yeah. And
a lot of times we want to rush the process because we get involved because we know and we've heard all of the great stories.
Oh, yeah.
And we want to fast track there, not realizing that if we don't follow the process, we expose ourselves even more and put ourselves in the way of getting more risk. So I think that pause is essentially how I think of your company.
Yeah.
Is that you're a pause that's going to work with whoever and meet them where they are. And then as you can hear, it's a community. You'll have direct access to there's so many questions and so many stuff that we could talk about. Way too many for this episode. But again, you have a way to connect and to sign on to his curriculum, and it's a community where you'll get met where exactly where you are. With a professional, this isn't just somebody who woke up one day, or somebody who just woke up one day and was like, "Yeah, I want to do this thing." No, this guy, like I said, ever since high school, he was always the smartest. Everybody that went to high school with us knows this too. But then he was actually a stockbroker. He actually does government contracting. So this isn't just somebody who just decided to do a thing. You're actually getting expert in that field, and a lot of times we don't have access to people like that. A lot of times we either have to figure it out on our own, read some books, trial and error. But to have access, and when I found out that you were, the broker at Skytrade, we were talking ever since then, and you gave me so much free game then, and now he's doing that for everyone to benefit from on a larger scale. So kudos to you, man, for helping us. Because, like I said, I'm going to point everybody to you now, including myself. I'm going to join up because I need to get better on some and learning some stuff
and
too.
I'm still a student of the game. Like I still keep my ears to the ground because there's something I knew that I can always learn. I also invest in crypto. I would say that's the smallest portion of my my portfolio, and my base in the investment market with stocks helped me know how I wanted to navigate personally through crypto. So I was like, as far as what I'm going to put in there was only like maybe 0.5% of my entire portfolio because it was more of a case study for me. I was like, I know I can do fine without it. I'm not going to be completely just distracted by all these crazy gains people are getting because they want to day trade. And I was like, no, I just really want to make sure, one, I'm not completely missing out, and I got some portion captured in that market, but and that's part of the diversification. So like some people are down significantly in crypto. I was like, no, not me. It doesn't affect my overall portfolio like that. And again, it just comes with I just happened to stumble upon this, got an internship. A couple people just had some faith in me. They said, oh, well, he might not know anything about investing right now, but I can tell he likes people. He wants to help people. So just bring him on board, and that changed the game, And then there were things that, like I said, about the industry, it can be a very big sales game. And there was some aspects of that like I didn't care for as much, and I hate feeling that like having to force people to like make a quick decision so I can meet a quota each quarter or something like that, because that's what the game can boil down to. Is just having a certain amount of people on your books. And I left the industry, and it's like the educational aspect is what's drawn me back, because I feel like I can't hold this or keep this to myself. I don't think it'll be fair enough. And like, I don't feel like my legacy will end with just my kids. I want to help other people. So that's really what Financially Present is about.
That's what's up, man. And you're doing just that. I think of like Earn Your Leisure, and shout out to that group.
Yeah, they're doing great. I love to see what they're doing.
You're in the same category, man. And it's like more now more than ever, like people want to learn. Yeah. And they want to be guided by someone that's trustworthy. Yeah. And I think you're definitely that. I will say the main thing that stuck out from hearing you kind of talk about crypto and everything going, because I know people that over leverage themselves, where they would come out of a strong position to jump in something because they heard it. Right. So like the thought that comes to my mind is keeping your cool. Yeah. Keeping your cool when it's going well, right? And you hear of something new, like remember your plan, which goes back to coaching. You got to have coaching. You got to have the foundation built, and then stick to that even when something else that comes enticing. You might be able to dabble some in it, but you don't want to overextend from what you plan. But then also, when the market comes down, also keeping your cool. And remember, like, historically, 10% is the return. So whether it's a higher year or a lower year, being in it for the long haul is beneficial. Because over time, you're going to get way more return than like your savings account.
These behaviors that we see are pretty consistent. I mean, you know, if you look at everyone's talking about recession. Recession in just simple terms is just 2 quarters or 6 months of, just bad GDP, gross domestic product. So what the country produces with goods and services, things like that. And if you see it bad for 6 months, then it trickles down to other aspects, whether it's revenue from all of these, these companies that are publicly traded, and it affects the job markets and stuff like that. Because if a company's not doing well, they're less likely to hire and they're less likely to have better revenue. So that's why recession is such a big buzzword, but it's not brand new. It's not something that's foreign. It happens every few years, really, and just being able to understand these ups and downs and navigate them properly, like that's what this is about. So that's why I also made sure, like, when I created products, I'm creating products for every budget that anyone can have. If you want free content, that's on my YouTube channel. If you want to pay a little bit more, you can buy an ebook. If you're ready to be a member and enjoy the course too, it's a little bit more expensive, but ultimately, like, you can always get something from me with any budget you have, because again, this is more about the education than anything else.
That's what's up, man. Yeah. That's what's up. So I'm gonna have the link in the bio or in the subtitles. Click my link and you'll get a percentage off. But make sure you join and click that if you're interested. You should, if you're already in stock, then you're starting somewhere different, and there's some room and some more information that you can gain.
Oh, for sure. If
you're new to it and you always wanted to get in but didn't know how, now this is the perfect opportunity.
For sure.
You're not going to get a better opportunity than this at the price. So yeah, man. Any final take for anybody that's either new or existing in stock or in today's climate?
Yeah, there's always something to learn, always something to be learned by anyone in any profession, especially when it comes to investing. And I think it's important to just be patient and take that time, because it's important to reflect and understand. And this is more about awareness too, because there's a certain point where you max out your own skills and you need to seek professional help or seek someone who has been there before you. And whether it's your health, whether it's your playing skills as a musician, or your investing prowess, that's one of those things where it's like you have to surround yourself by other people who are already in that field, or people who are a few steps ahead of you in order to accelerate. So, and it helps build that confidence and help you have those calluses as well. So it's really important to value the education. I think sometimes when we're in the trenches, we don't think about it as much, but it's, and I think about the generation before me and how they used to say, I don't want to go to the doctor, or they're just going to take the copay and it's just expensive and stuff like that. And I'm consciously trying to be more aware of that. So if like something's going on with me, I'm like, I need to go ahead and see a doctor. I need to try and prioritize my health, and that's where health is wealth. That's where the real wealth is, because the money won't matter if you're not here to do anything with it. And once you understand the way life is set up, we're always going to leave things behind, right? So just want to leave something behind for other people, really. And this is kind of just part of my legacy, or the hill I'm going to die on, basically. But I want to at least have said that I have been more conscious about getting better and helping bring people along the way. So
that's what's up, man. Again, kudos to you. And the final thing that I would say this show is called "You Already Successful." As we walk through, like your upbringing, and then high school, and then you being a stockbroker to government contracting, a lot of times too, people look at where we are here. and they're like, man, that is cool. But it's important that all of us have a story and a struggle. There's a lot of struggle to it.
I've not arrived.
And we haven't arrived. But just, that there is that connection about, like, you were already successful in certain things.
Right.
That then you got a little bit uncomfortable at doing something different. Yeah. And then you learned what that phase had to offer, and before then moving on and ultimately arriving or getting to where we are now. So I think everybody has that, and it's not about how much money you have in your account.
Right.
It's literally about what do you do well, and acknowledging and realizing that, and then building off of that. Yeah. And we all have that. And again, I can hear and see that from all of your experience that you shed and talked about. So just again, that fits the theme of you were already successful because you really were. It's not just something that is said. We all have that. And then we acknowledge that and build off of that to continue climbing our ladder. And we don't know where arriving is, right? It is good to set a goal, but we're all on a ladder, and we're just continuing to climb that ladder. And this is kind of where we are now. So if no matter where you are and what you've done, like, acknowledge what you've done and realize, don't disregard things that you can improve, but also just kind of acknowledge what you've done well, and then build off of it and keep climbing.
It's so important you said that, and sorry to keep going, but
good.
It's extremely important when it comes to investing, because it's so common to look at somebody else and say, oh man, they made this off of that. And online, it's so easy to and that's how they bait people. They tell you about all their fantastic returns and things like that. And some people are so starstruck by the numbers, they're not even really vetting how people are getting to that, and it's a good way to just generate sales and leads and all these things. And like, I just want people to avoid the bear traps and the snares and all those different things, because honestly, when you invest in the stock market, they're not going to ask you like, hey, how comfortable are you with this and that, or like, if you lost this money, what would happen to the rest of your, your life outside of your investment account? It's like, they don't ask all that. If the check clears, they'll let you buy the stock,
Facts.
And it all boils down to just being familiar and comfortable with certain things, and sometimes it does take being uncomfortable first in order to be comfortable. And I know what it is to be in a space where you're the only black stockbroker, or the youngest branch manager, or in a county where it's like there's not that many black people, or it's just like there's always, I feel like my life is sprinkled with different levels of uncomfortability, and that's allowed me to, I don't know, I was just saying before we even started, I was like, that might be my superpower, just being flexible and just figuring things out.
You mentioned uncomfortable, and that's one of the my products that I have.
I love that.
Like you said, we should be both.
Yeah.
You know what I'm saying? It's a sign of growth. But then the more you know and you learn in that situation or circumstance, then you get more comfortable.
Yeah.
And then you get comfortable in that space, and then you learn something else.
You gotta change the room. If you're too comfortable in the room, it's time to change. Yeah, that's it. Time to change. So this whole journey for me has been big, because I'm normally very guarded, very private. It's like, I gotta do social media. They're like, you got to be a content creator and this and that. But I was like, well, I get to put a little bit more of me out and things, and that's something I'm continuing to discover. It's like, I can't only just be all about the information. I just got to be a little bit about me and who I am, and people understand me a little bit differently as well as they continue to look at the different platforms and stuff. But I get to have a little fun with it too. So
yeah, man, I definitely see it, and I follow. So follow Financially Present if you don't already, and you drop a lot of jewels on there.
Yeah,
as well. Instagram. You have a YouTube channel as well.
I do have a YouTube channel. I upload a video every week, usually every Sunday. So it's gonna post. I'm at church while it's posting, but like I plan it like a couple of days before to just schedule the post, which is a beautiful feature on YouTube.
Right.
But man, it's fun because I get to just put a little bit more of me out there.
Yeah.
So it's good, and that way I'm able to kind of build on the stuff that's already on the website as well. And I have there's some other things, and this is kind of a teaser, but my kids are a big part of why Financially Present is here. And because it's not about, so if you ever see this logo, I'm actually glad I'm talking about this right now. You see that it's an F, And I already talked about faith, family, finance, but what you'll see in the actual symbolism of it is you see that there's some level of moving forward while passing down. So passing something down, not just the finances, but the education, right, that knowledge. So the point is to pass it down to my kids and pass it to other people. So you're going to see videos of my kids in it, as far as the YouTube channel, and they've inspired, just different aspects of how I teach finance. So there's a lot of other things that are in the works too, but not ready yet. But
but that's dope, man. I really like that meaning too.
Yeah, and if I didn't work with, my brother that helped me with the
what's his name
some
again?
of the marketing, and this is my brother Dustin.
Oh, okay.
Helped me out with that, and then I also have another brother that helped me with like the website and stuff. And it's just, and part of this was just surrounding myself with people that knew more than me about specific things, and so it's good when you see a circle and too many of you guys have the same skills and stuff. It's like you got to bring some new people in, and I love networking and stuff like that for that reason. It really helps me grow. So
that's it, man. Like if you got people around you that know better, it's like a coach almost in that sense. You'll reach your goal quicker.
Yeah.
And that's really what Financially Present is that surround yourself with some professional coaching in this space, and you'll get to that goal quicker and responsibly. So you don't have to do it on your own. So click the link in the bio, sign up. But it was great having you on, man. It's great seeing you.
Fun.
It really has been fun, and we got to get you on the follow up down.
I'm
we
down.
Can pick up some more because there's so many different types of investment. It's not just in a company, but you can invest in an IRA. We're talking about IRA Roth.
Yep.
There's custodial accounts for kids, and there's so many different layers of investing that they're out there to benefit us, and we just got to know about them.
You have to just be comfortable in that.
And be comfortable in that.
But it requires the discomfort, the uncomfortable nature of it first.
Facts. Well, this episode's a wrap. Like, tap, share, subscribe, and come back. Peace.
All right.